Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, March 24th, 2021. In this video, we'll take a look at the indexes, the hit on the market-leading FAANG stocks real quick. There's some things I want to point out there. A couple of the sectors that I've been highlighting recently, and we'll hit on crude oil, natural gas, and wheat. Those are a lot of the trade ideas thrown out over the last week or so here. All right, so the Qs are still in, by most metrics, correction mode. This is QQQ, daily chart, same story, well below the primary uptrend line on the March lows, put in a divergent high, and we've been stair-stepping lower and still below that 324.65 resistance level. So, you can't really read too much into today. We had quite a few things hit support yesterday and my price target, so I'm going to get into that, and that's why we're having a bounce here. But it's how far it goes, we'll see, but I don't think very far. I still think we're probably looking at another leg down, in the coming days or weeks. We'll see. Let this, again, a lot of things hit support. Some had divergence, so we may get a little more upside here in the near term on certain things that can move the market, which I'll get to in just a second. All right, so there's QQQ. I'm going to get to the market-leading FAANG stocks in just a second. When we look at the weekly chart, remember, bigger picture is this. And this helps to formulate where I think we're going, and the reason I think that as much as that 12% or so drop in QQQ was certainly a correction, why I think there's more, and that has to do with this. This is the first time we've had clean and big negative divergence in quite a while. Last time we had it on the Qs was back here on both the PPO and the RSI, and that was that drop that in the fourth quarter of 2018. It's been a while since you had on the weekly chart, and that was good for a 24% drop, so twice what we fell so far. And nothing, corrections are never straight down. Along the way you're going to have your kickback rallies like you did here to get to where you're finally going. So that's again where my longer term thought is, or my longer term outlook is. And then we need to take out this trend line here on the weekly, and again, at least in the near term, I think we'll come down and test that 40-week moving average. That's QQQ. SPY still, relatively hanging in there compared to the tech-heavy QQQ. If I can load my lines here, there we go. The trend line is not as clean here on SPY. But there is one, and we're cracked below it, and we're back testing right there, and you have some divergence here at the recent highs. Daily chart, same thing, divergent high recently. Hit that 387.81 minor support the other day right there on Thursday, and we need to take that out. So really no change to what I said yesterday. That's our, we need to crack below that low from Thursday to open the door to the next downside target, which is about 370.45 on SPY. And finally, the small caps, IWM, big divergent high right here, and the small caps have been leading the way recently to the downside. It started out with QQQ, then we've rotated, as far as the shorting ops and the favored sector, or I should say capitalization, went from the big tech names over to the small caps. And finally, if we get a broad-based sell-off, we'll see the S&P 500 start to do the same. But that's it. And remember, IWM hit support yesterday. It hit this. This has been shared on the 60-minute chart for a while in the videos over the last few weeks. 215.80, pretty nice support right there on IWM. We had lots of reactions. That was resistance there. There was a breakout. The breakout was back tested again. Little whipsaw down through it, but still a lot of reactions there. And from the looks of this is just a reflexive bounce. It's a tag off the initial tag. When I say the initial, well, that was the initial. I'm talking the initial tag for the first time in weeks. We haven't been to that level since back here in the beginning of March. And so that was the first tag in a while. So you get a bounce there. When you look at the small cap futures, those are RTY, a perfect hit of my T2 zone. This was laid out weeks in advance, and was favoring a move down to at least this level, and that's what we got yesterday. We entered, you can see, actually split the difference right in the middle of my T2 zone, which runs from 2160 up to about 24, whatever that is there, 2175. So that's it. As I often say, price targets are there because the initial tag of a target often produces a reaction. We hit T1 and we traded both sideways and a bounce. There was a reflexive little bounce there, but mostly sideways consolidation. Then once T1 gave way for good, took us right down, one fell swoop, almost perfectly split the crosshairs, or the uprights, I should say, on T2 zone, and boom, we're right back to this downtrend line. So this is really probably the first place that we could come in and see a reversal. So if you're looking for more downside, which I laid that out yesterday and quite a bit, I gave you some additional downside targets on the small caps. This would be the first place I'd be scaling back in or closing longs that you took on that drop down to T2. Right here. So down to the trend line up to, you can probably see I added a line. I tuned the color down or the brightness down, but I have minor resistance here about 2233. I could see enough reactions along this line right here to add that, and that's just overhead as well. So really, here's where I think the bounce will terminate, and we'll get another leg down anywhere up to about that T1 level. First target was at 2264.15, give or take. We'll call it 2264 to about right here. So I think this is an objective place to close out again any longs taken on the tag of T2, or if you want to add back some shorts or add new shorts. I have to say, and I never like adding shorts here as much as I do on the initial breakdown and all the other sell signals early on, because this could be it. This was, again, my minimum preferred target zone. That was the first target, and that's it. So that was hit, and what else did we have hit? I'm going to get to the FAAMGs. Yeah, let me do the FAAMGs before we get to crude oil, because crude oil also hit perfectly my next price target, and that's where we've seen a bounce so far. Let's talk FAAMGs, because that is, to me, really what it's all about, these market-leading stocks. I'm going to go over to QQQ, and what it's going to do is load a watch list. You can't see it. It's off to the right. But I'm going to go through the top components, and these are also top components of the S&P 500 as well. Apple just continues to be dead money, and it has been for quite a while, going all the way back here to around the beginning of August of last year in this trading range. So it's still locked in that trading range. We had a false breakout there, aka bull trap, whipsaw signal, whatever you want to call it. We put in a divergent high, and that was when they reported fourth quarter earnings. And since they reported a blowout quarter, record quarter, the stock's done nothing but sell off. So that's usually not good news when a stock fails to continue to go up on positive fundamentals. It just means, at least in near term, that the stock was saturated with buyers. When everybody's bullish and everybody's long, there's nobody left to buy. You only have sellers left at that point. So. And again, that's literally speaking, but I think you get the drift. And that's it. But now from a technical perspective, nothing's changed. I had a minor resistance right here, minor support at 125.75. It was also my first price target on the downside that was hit there. We flagged below it. And since then, look, we broke down. And Apple continues to stay below that level and got rejected on the back test there. Remember, support once broken becomes resistance, and so it's really this story of Apple. It's pinched between resistance and support. Just below, you have the 200-day simple and exponential moving average. But because we did break, as I said before, I believe that when we break the 125.75 level, it will open the door, and I still think it does, down to the bottom of the trading range. And that next target there about 106.50. And remember, weekly charts also very much come into my analysis. This is a weekly chart of Apple. I've covered it many times in the past. Look for these divergent highs on the weekly time frame, and they usually lead to drops measuring well into the double digits. There was a divergent high followed by 34% correction, divergent high 39%, divergent high 35%, divergent high nothing but about a 18 or so percent drop so far. This one gave you 45%. So you get the drift, and we're very, very far above this primary bull market uptrend line right here, at least the way I have this one drawn, and that would be a natural, target if things really get ugly. As of now, again, let's just focus on some of the near-term targets like I gave you on the daily chart, and we'll go from there. Next up is Microsoft, same story, divergent high on the weekly. Microsoft's been one of the stronger of the big market leading stocks, but there it is, dancing around on this 228.16 support, and that's becoming a bigger and bigger level. Why is it a big level? Well, it was the top of this multi-month trading range here that I just boxed in. We broke out there and we back tested, and we've been back testing. But so far, it's been a very muted reaction. Usually you break out, you come in and back test once, maybe twice, and then off to the races. That was and still is a breakout, still bullish as long as it holds. But the buyers just aren't stepping in so far. Now, they're not taking it down either. The sellers aren't, doing their job. It's a stalemate. It's a Mexican standoff right now between bulls and bears, and that's it. You just need to resolve this range and again, take it in context with what everything else does. If Microsoft pops that range and Apple and Tesla and Facebook and Alphabet are all heading lower, then that'll probably be a whipsaw signal. But if they all can, hold support and break above the overhead resistance levels, that's going to be bullish. And a downside break, especially this trend line, will be bearish and take us down here to my 199 swing target right there for Microsoft. Amazon, daily chart here, same story. Took out, then we had this symmetrical triangle recently, as pointed out when we were back in it, broke down, back tested, and still below it, but held that key. I have it in yellow because it's a big level, in my opinion, 29.43.50 support. We held it successfully so far. We're also dancing on the 200-day moving averages there. This is the 200-day exponential with the simple just above it. And so here's another stock sitting on very, very key support that will, I believe, determine the next trend. Either it holds here and off to the races, new highs. Of course, you have to take out that trend line, or we break it, and that's going to open the door for a much deeper correction in Amazon and the stock market if that level goes again 29.43. Because if it goes, we're also going to take out the 200-day moving average right there, the exponential. All right, and that's Facebook. Same story. I know this, is repetitive. I'm talking the same thing for months, but these trading ranges are incredibly well defined. You can see, other than brief whipsaws, but lots of reactions and very simple stuff. Swing up to the top, down to the bottom, up to the top. The midpoint often acts as support and resistance. There's your midpoint line. Once that's taken, you go to the bottom. Once you recover it, you go to the top, and so forth and so on. The only time we broke it there, we didn't hit the bottom. We're back to the top now, but resistance is resistance until unless taken out. So same story. Bulls need to see this happen. Bears need to see that happen for the next major trend. And if you also turn off all the lines there, you can see same story. These 200-day moving averages, I talk about them a lot. Simple and exponential right here. They act as support and resistance on a lot of tech stocks, and so far Facebook has pulled back and successfully held its 200-day. Puts it in a bullish trend. From that aspect, but again, for months now, many months, the trend has been really sideways, go nowhere. So that's it. And again, the most important thing to note right now is that we're at resistance or very close to the top of that trading range. So that's what you want to keep an eye on Facebook and all of these stocks that I'm covering now. Alphabet, same story, big level here. And you know what? I need to give you that number now. It's easy to add to your chart. You can see the recent lows, but it's about 2015, 2015 right there. Dancing on that support level. If it goes, it should be a quick ride down. There is trend line support just below it. You need to see that get taken out too. And then there's the gap support there about 1929. So the way it works is, if and as each of these levels go, it opens the door to the next level. I'd be remiss not to add one more level right here because that's the top of that trading range, and that's 1820, almost 1824. So those are your support levels below that, again, if taken out, would open the door for a larger correction in the market and in Alphabet, of course. Whereas, upside break to clearly put this trading range in the rearview mirror would be at very least near-term bullish and possibly longer term. Tesla, another one, we had the breakdown of the primary trend line, back tested it for a while, set up the minor trend line, and just like Apple, it peaked out on its fourth quarter earnings, put in a divergent high, and it's been stair-stepping lower in correction mode since. Dancing on that 662-ish support that I've had for a while. We briefly took it out, then recovered it, and you can see we've been trading on that level as well as the uptrend line. So same story. We're on important support for this, another market-leading stock right here. go much lower. It's going to take us down to my next target of 464, and we'll call it 465. But if we go up, we have to take out this 802 resistance. If we do, then that's going to be near-term bullish. So those are the levels to watch. 802, and really, it's not at this point in time. That 661-ish level has been traded through once, but I think if we can just get below this recent reaction low here from last Friday, that should do the trick, I believe, in Tesla. And like, my scenario that I've laid out with the NASDAQ 100 and some of the other indexes, probably overshoot the 200-day moving averages, hit the price support, and then park the day or the week back on the 200s, at least have some consolidation there, and maybe the end of the correction if we get that. Okay, and crude oil, this is CL. I gave you recently, I was posting two different versions of the chart, a 20 hourly chart, 3-month or 2-month with 60-minute candles, and then the 6-month 2-hour, in which I gave you additional targets. I first had T1 and T2 on the 60-minute chart, and then recently said, okay, if we take out that T2, which was already hit, that'll open the door to the next target, which was 57.25, and that's what was hit yesterday, almost exactly to the button. I don't know where the low was, but here we can zoom in. Let's go down to a monthly chart here. And there it is. I mean, I think that's almost an exact hit of that 57.20 target that was laid out in advance. We took it out, took out the recent lows right down to it. And when we did, this is the thing, we put in positive divergence. So that's what I like to see after a correction, to reverse and cover short positions and go long for what could be a swing tradable rally. And so far, a decent rally off that level. We're moving up today in crude. If I can't measure it, I'll move the line right there if I grab it. So I'm going to do this, go a little higher, and then walk that line back down. It's been about a 5.5% rally so far off that divergent low. Where does it stop? If it does, well, it works this way. This former support coming up on T1, that was the first target, is about $61. So that's resistance, and then you have a line here, which I had as a reaction high, and that is, let me just put the crosshairs there, about 62. So say 61 to 62 is where I expect at least some consolidation, and that could be it. Let me jump back to that 120-minute chart. There's still very much the possibility that even though we have a divergent low right there, positive divergence, that we could get a nice, and we've already had a nice counter trend rally, take another leg down, and then go on to break the third target, the 57.25 support, and move on down here. And I think we're going to get that. It's just a matter of how far do we go up. Big resistance, if you want to ride this divergent low up and shoot for something above this previous reaction high, that's a big level right there for me. 63.55 to me was a huge level, because you had both the primary uptrend line off the lows, it goes to the left of the chart, and very, very well defined support. Big reaction, major reaction high there, a breakout, a back test, back test, back test, and then when we broke it, we didn't break one, we broke both support levels at the same time. So on the way up, should crude rally, and that'd be a pretty healthy rally, it'd be another 5% or so, that would be an excellent shorting op or a time to close out longs if you're holding out for a little bit more on crude. And then likewise, obviously, if crude bounces, the sectors do, the energy sectors, that is. XLE yesterday, hit that 46 or 47-ish support, a little bit above 47 first target. And because crude's bouncing, XLE is bouncing. Again, this just doesn't look like a one and done. It looks most likely like we're going to get a counter trend rally, which today is just one day. It doesn't really make a trend. Bounce off the initial tag of a support level, but then probably get another leg down. And again, the next target there is 45.30. And then XOP, we took out yesterday, we took out 80.35, which had crude taken out that price target that it hit, the CL hit. If it had taken that out and gone down, we would have probably continued down. Well, I can tell you we would have definitely continued down here. However, crude hit support right there, and that's again why I cover all these charts. They're all tied in together. They're all very related. Even if you're not trading anything but the energy stocks, you want to keep an eye on crude oil. It's just like gold. I would never trade GDX or gold mining stocks or silver miners without watching the charts of gold. and silver and the US dollar, because if gold reverses, then that's where the miners reverse. So same thing with crude and the energy stocks, and that's that. So right now it's basically a recovery of that first target. So this is yesterday's move then was a momentum fueled overshoot, and again we're back above that first support level, first target of 80.35 on XOP. I still favor or lean towards the scenario. This is a counter trend rally with another leg down to come soon once the bouncing crude runs its course, if and when. XES, now this one's still below resistance. It took out that 55.44 first target slash support yesterday and still below it, and so that has resistance overhead, and that kind of meshes with, I think the bounce will be relatively minor, and even though we have that divergent low in crude, and I can make the case for more upside, I think we'll probably fall shy of that uppermost, that bounce target I gave you a minute ago, the highest bounce target. So that would take us down to about 47.75 on XES should crude reverse and take another leg down. Natural gas, nothing exciting or big to report. It's not so far, it's really not going anywhere since I pointed it out. Now it still has potential. We've still put in divergence on the PPO. Would have preferred to see it on the RSI as well, but we do sometimes you get divergence on the PPO in your rally, and we did take out the downtrend line, and we are still above the downtrend line. We're kind of flirting with that uptrend line right now, and we're still above this support. And again, I want to see it remain above 526. That's a big support level. Any move down there, you could back test the downtrend line again. And that level, and you could then take off, and you need to take out that 2261 level right there, or 262 we'll call it, and that would open the door to the next target up there. And last but not least, and this is not an all-inclusive video, but I did point out wheat yesterday, so I just want to update that. Wheat is coming in back testing, and it's cracking a little bit below that 627, 645 support. Remember, we had this whipsaw signal there, aka bear trap, impulsive buying, but they're fading that rally so far, and pretty much what it did, it ran right between just shy of that 645, 711 first target, and it's pulled all the way back. So ideally wheat needs to giddy up and rally from here, because if it takes out those recent lows, then it's probably heading lower, or maybe it's going to remain in this price. Well, that's still heading lower, but there's that channel I have right here. These two lines draw the price channel that wheat's in, so it could take out that, put in a marginal new low, and still have divergence. So it's up to you how much room you want to give it. Again, not ideal that we had that whipsaw right here and then the move back up, and to see that fall back below there, it's just sloppy is all it is. You know, ideally you would have seen more buying, maybe a pullback after the run up and, you know, the near tag of that 645 target. But as of now, it's just a rejection off the top of the channel. So you have to look at it that way. I'd be remiss again not to point out we're in a price channel, downward sloping channel. And so far that's just a rally to the top of the channel. And maybe we head back down to the bottom of the channel. You know, you can always buy the bottom, pullbacks to the bottom of the channel and swing it up to the top. That's been the MO recently, but sometimes when you hit the bottom, you hug it for a little while before the reversal. So then it gets kind of tough. You'll have to decide where to place your stop if you are going to buy the next, you know, a pullback to the bottom of the channel. But again, let's see if we can get a reversal here, because we're right about on that level. See that we're at 627 now, so close enough. And if we can get another leg up, look for a pop above 645, and that should take us up to 670, about 674. And, you know, not to, I know sometimes I forget, a lot of you guys don't trade futures, and that's fine, it's completely understandable. Wheat is the ETN, WEAT, and you can see it's pulled back to this support level here, which is at, where's the number? 594. Yeah, that's the line. See, I had this fourth target back way back when at 591. That was because of an official trade. And what I do is I'll always set a sell limit order slightly below the actual resistance. So the actual resistance back then was 594, and resistance once taken out becomes support. So it's a level I've actually had quite a few, you know, targets on, final targets on before, including this one right there, T4, that one right there. Yep, 594. So T4 was right down here. And that's about it. So overall, wheat is in an uptrend. This is an uptrend, series of higher highs and higher lows, and there's your last big reaction low. So, if it can reverse here or if it can reverse there, as long as we don't undercut that previous low, it keeps this uptrend intact. And we also can see, a nice breakout. This was what I believe to be a multi-year basing pattern, and that was a breakout right there above it. And you can see we had a reaction high right here. So really, we're back testing the top of the range. So I'm viewing this as potentially the next, an objective entry for the next leg up in a new bull market that started really, with these lows right here where the bear market ended. Okay, so that's about it. So to summarize it, we had small caps and in some other things, and energy stocks and crude oil hit support. So we're getting what I believe to be a reflexive bounce, a typical bounce off the initial tag of those targets. But I do believe it's going to run its course relatively soon, and I'm still leaning towards another leg down in the market and some of the commodities that I've highlighted as bearish trades, such as crude oil. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.